One thing I want to point out while we're kind of in the vein of tax credits is the difference between a tax credit and a tax deduction, which is very commonly misunderstood. Okay, so I'm gonna use like very basic math here because I think everyone can follow. Let's suppose that we're talking about somebody whose income is $100,000. Okay, just a square $100,000. And let's assume that that person's tax rate on the 100,000 is 25%. Okay, flat tax. That's not actually how it works, but just for argument's sake here, if there was a flat tax of 25%, then they would pay on the $100,000, $25,000 in taxes. Okay. Now, if I got, for example, a tax deduction, okay, maybe my income comes from a business, or maybe it's my Schedule A itemized deductions, whatever the case is. Let's suppose I have $10,000 in deductions. Okay, not credits, deductions. Well, how does that fit into the tax equation there? It doesn't come off the $25,000 of tax. It comes off the 100. Okay, so instead of having 100 of income, now I have 90 of taxable income. My income actually went down from 100 to 90, but the 25% rate still applies. And on $90,000 of the tax percentage at $90,000, I'm going to pay $22,500. Okay, so how much did my tax go down? Because I got a $10,000 deduction. Didn't go down $10,000, and it went down $2,500, right? 25% tax rate times the amount of the deduction is how much my tax actually went down. Okay. If on the other hand, I got a $10,000 credit, well, that doesn't come off the 100. It does come off the 25. Okay. So if I got a $10,000 tax credit, and before that, my tax would have been $25,000, my tax is now 15. So the $10,000 deduction saved me $2,500, and the $10,000 credit saved me $10,000. So it was 4 times as impactful to get a credit as it was to get a deduction. So people look at like, oh, the solar panel credits and the electric vehicle credits, not that much, they're not that significant, but there's not always comparing it apples to apples. Would you rather have a $30,000 deduction or a $10,000 tax credit? Well, I'd rather have a $10,000 tax credit, especially if my tax rates are reasonably high. That's going to be very, very impactful. Bearing in mind that most tax credits are non-refundable, including the solar panel ones. So you have to have some tax on the table that you're going to otherwise leave with Uncle Sam. If you go and get this tax credit, they're going to reduce your tax by the amount of the credit. But if your tax was already very low or zero, you might potentially not get to use all the credit, but you can carry the balance over. So if you had a $10,000 tax credit, and you only got to use 5 because that's how much your tax was. The other 5 of non-refundable credit is going to carry to the next year. Eventually, you're going to probably get to use it, but I always just like to point that out.